Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And man, we have had a fun first 4 or 5 months of 2022. I'm recording this in late April of 2022, but I kind of want to look at what do we think about the housing market. Again, as I stand here, I am talking about the national housing market. All housing markets are local. You should have your buy box with your criteria. But I do want to step back for a moment and just talk about the housing market. We have seen something happen this year that I have never experienced. I have personally been investing in rental properties for over 20 years. And to say that I have seen something here recently that I've never experienced is important. So let's talk about what is going on. Right? What do we know? I'm going to list some questions, and then we are going to highlight some risks. This is all about real estate, housing, the single family home today. This is not about commercial. This is not about office, not about storage, none of that. This is very much single family homes, nationally speaking. Okay? If you want to talk about Austin or Miami or LA, not that discussion. Single family homes, nationally speaking. So, what do we know? Right, I'm going to put these pens down. What do we know? I think we know two things. Right? Rates have exploded. So, I have invested in a higher rate environment. I have had mortgages with higher 30-year terms, or 30-year rates, excuse me. But to see the rate of increase, to see 250, 300 basis points in relatively short order, we're talking 10, 12 weeks, that is not unheard of because, again, we have seen it in the early 80s. But come on, 40 years ago this happened. So again, rates. So let's call the average rate today 5.25. And a year ago, it was about 3.37. So 1 year ago. So that's what we know. The rate today, let's call it 5.25. The other thing we know is affordability. Crashed. Affordability is made up of 3 metrics: price, rate, wages. It is those 3 metrics that you have to track, you have to follow. The fact that rates went up so fast, just wages don't move that quickly. So we know without question rates are up. And we know affordability is down, right? These are not judgments. These are facts. So let me switch pens or switch colors. Now let's talk about the questions. What are the questions as we sit here late April, early May of 2022? Rates. Will they go up? Will they go down? Will they go sideways? So again, something we know is the Fed is tightening. But what you may not know or may not yet appreciate is mortgage rates move a lot faster than the Fed. The Fed meets every 5, 6, 7 weeks, rough and tough. I think they had 7 meetings all year, maybe 8. The next meeting is May 4th. They are raising a half, as I've been calling for weeks. A lot of that is already in the mortgage. I would argue the next 2 50 basis point moves are already in the mortgage. The Fed goes up 100, the mortgage rate may go up a little. So the first question, where will rates be at the end of 2022? So let's call the over under 6%. Are you going to take the over or the under? I don't know. I know a lot of you, and a lot of you message me. Thank you very much for every comment. Even the haters, thanks for the comments. I guess even hateful and disrespectful comments help the algorithm. So thanks for everything you do to help the channel grow. We have seen an amazing rate increase in the last 12 weeks. That does not mean we will see it again. In fact, I think the likelihood of seeing something we haven't seen in 40 years reoccurring, it's kind of like rolling double sixes twice or three times in a row. Sure, it's possible, but unlikely. But oh man, this is a tough one for me. Yeah, I think I'll take the over. I think I'm like 6 to 6 1/4. So for me, I'm going to call it 6.25. I think that's where we will end the year. Again, I've had mortgages higher than that. Again, this is owner occupied. So investors, you might be paying 7%. As investors, we don't really care what the cost of money is. We just put it in our formula and we adjust our offer accordingly. But again, for owner occupants, that is a problem. Next question is inventory. Supply. Are we going to get a wave? Are we going to get supply? If so, where, how, where is it coming from? Who is selling? Is Wall Street going to sell? Are foreclosures going to come? Are builders going to rescue us? Are fear of missing out buyers going to sell? What is going to happen? One of the things I did on my recent vacation is I went back and looked at some of my old videos. And I did a video when I had 225 subscribers. So if you were one of those, thank you very much. But just so you know how bad the inventory is. And actually, I have a video coming out later today that summarizes this, but it's important, so I'll hit it again. September of 2018, in my market of Fresno, California, there were 2,846 listings. So let's write that down. Can you see it still? Let's write it down. So where's my eraser? There it is. Let's write this down. You have to have the scale of what's going on. So 2018. 2,846. Fast forward. So I had a real estate agent in Fresno pull this yesterday for me. Do you know how many available listings there were March of 2022? If you want to take a guess, leave a comment below. But here's the deal. March of 2022, there were 413. So we need supply, and we need supply in a big, big way. In 2018, again, the video that comes out later today on my channel, we had 3.2 months supply. Maybe it was 3.3 months. I think it was 3.3, excuse me. Today with 413, we have 0.7 months supply. You will not see price drops with less than a month's supply. Sorry, not going to happen. So the big question for me, where will inventory go? I think inventory goes up. I do not think inventory goes up enough to force prices down. Think about this. Inventory has to go up 700% to get back to 2018 levels. It will certainly go up. It has to, right? Come on, it has to go up. It'll double. It might triple. It could even quadruple. But I don't think it gets back to 2018 levels. So again, know your numbers. If you can, have an agent get you numbers from 2018. Compared to your buy box today. We have to have more supply. Where is it coming from? Is it demand destruction and then supply builds, days on market expand? Probably. Absolutely. Demand destruction is real. Demand destruction leads to longer days on market. It even leads to price drops. But how fast will inventory build? Also, the normal mechanism of move-up buyers is broken. I have talked about supply destruction, interest rate trap a lot. It is real. Whether you like it or not, people have to live somewhere. And if their mortgage payment is less than rent, they are going to fight tooth and nail to stay. So those are the questions. Now the risks. Let me switch colors again. Risks. Risks. Can you see that? Not really. Red's not a great color. Let me get a different color. Oh, let's get purple. What the heck? So, sorry. Let's get risks. Unemployment. Let's actually add to this first. Fed mistake. The biggest risk we have is another Fed mistake. The Fed raises too fast. The economy can't absorb it. We smash into a wall and we have a horrible, deep, dark recession. The Fed doesn't raise fast enough and inflation takes hold. Wage inflation grows and we have inflation for 4 or 5 years. The Fed painted themselves into a lose-lose scenario. Too low, too long. We can hope and pray and hope for good luck, but the chances of a Fed mistake are pretty high. Unemployment. Unemployment today is 3.6% and might go lower. But ultimately, folks, it's going up. How high does it have to go before we have truly forced sellers? I don't know. What do you think? 3.6 today? Is it 6.6? Is it 8.6? I don't know, but I do think unemployment is going to go up. Is it going to be enough to cause a recession this year? I do not think so. I'm standing by my 2022 and 2023 whiteboard discussion in this playlist. Check it out. Other risks. We always have World War III. Yes, there is a chance that what is currently going on in Europe spreads. We are forced to get involved. It's obviously something we don't hope for. I certainly don't hope for. But it is a risk that is out there. There are lots of risks. In the end, if you are an investor, I have great news for you. Your job, buy box, learn your market, only write great deals, doesn't change. In fact, your ability to get great deals this year in 2022 went up. If you are an owner-occupant buyer, man, you have some tough decisions. I don't know, right? You have to look at your family, your household, what is going on, how long are you going to live there? All of these really important decisions. Owner-occupants have a tough decision. Owner-occupants' demand destruction is real. Some of you will keep renting. Some of you won't move. Investors, your job never changes. Buy box, daily discipline, do the work, only do great deals, 30-year money, no adjustable rate money or mortgages. So again, what do we have? Rates are up. Affordability is down. Where do rates go this year? Where does inventory or supply go? Again, remember, my market, 2846 in 2018, September, I think. And then only 413. So we need a lot of inventory. Risks. the Fed mistake, unemployment, and World War III. Let me know what you think. Leave comments below. I'd love to hear from you. Take care. Bye-bye.